Are you looking to buy a property and get it financed by a bank? If your answer to this question is yes, then stay tuned till the end of this video. My name is Duron Almeida and I'm the founder of Limestone Realty Co. And over the past 9 years, we have helped multiple of our customers achieve their realty dreams by getting them loan sanctioned on them. So this is what you need to do. Just stay tuned till the end of this video where I will give you a step-by-step process on how to buy a property by taking a loan from a bank. The first step that you need to do before going and getting a loan sanction is go and do some homework on your credit score. What I mean is have your CIBIL score checked. So a CIBIL score is basically a score given by a credit rating agency which actually records the transactions that we have done into it and whether we have paid back the credit that we have used or we have not. So for example, if you have used your credit card and say you have not paid your bill on time, so that actually lowers your CIBIL score and makes your eligibility much lower to qualify for a loan. But say for example, you have used your credit really wisely, you've used your credit card, paid on time, and there are no transactions of any negativity in your credit history. So that will give you a much higher credit score and give you a higher eligibility when it comes to obtaining bank loans. So that's step number one, check your CIBIL score. The average that you need to have is a CIBIL score of around 700 and it will qualify you for a really good loan. If you have a credit score which is lower, you will definitely still qualify for a credit for a loan, but the bank may give you a little slightly higher rate of interest. So go back and check your CIBIL score. It's available on any website. You can just go and check your CIBIL score. Point number two when it comes to obtaining a loan is have your income tax returns in order. So what I mean by this point is that say if you are into business, then the minimum requirements that you need to have before you qualify for a loan from any bank is 3 years of income tax returns. And if you are salaried, then you need probably 2 years of ITR. So go home, go back, speak to your CA, get your income tax returns in order, because without your income tax return, there's no more going ahead for any loan. So have your ITR 3 years or 2 years, whatever the situation is, speak to your CA today. Point number three when it comes to taking loans from banks is have your eligibility test done. So what you need to do as a prudent purchaser is go to the bank, give them your ITR, give them your CIBIL score, give them your PAN details and give them all your income proofs, all the expenses that you have, the liabilities that you owe and the assets that you have. The bank will have a calculation that they will do and they will tell you, okay, you are eligible for 40 lakhs, you are eligible for 1 crore. Now what you need to do as a prudent purchaser is before you get into the market to look at properties, first get your eligibility test done from any of your banks. We can also get that done for you. Just give us a message down there and we'll get your eligibility done free of cost. So what the mistake that I see that people do, they get into the market, assume they're going to get this amount of loan, go to the step of having the offer placed and having everything conducted and then get disappointing news that, hey boss, you're not going to get that much amount, you're going to get much lower. So then all your efforts go into vain. So if you are a prudent purchaser, I highly recommend it that before you get into the market to search for a property, first go and meet your bank manager or just discuss it with us and we'll get an eligibility test done from any of our bankers for you so that you are more aware of the amount of loan that you're going to get. Hence, you can go real estate shopping. All the best. Point number four when it comes to taking loans from banks is only comparing interest rates. It's a common mistake that I see that people say, hey, that bank is giving me 6.5. This bank is giving me 6.4. Oh, I should go with this bank. But trust me, those are just numbers. Go deep down, dig in what are their interest charges, what are their processing fees, what are the hidden charges, what is this ancillary taxes. It all adds up to approximately the same. So be prudent in your decision when it comes to only comparing banks via their interest rates. They all have a lot of hidden charges in there. So discuss with your banker and get in touch and freely ask them what are the hidden charges and what's going to be the cost of all the costs involved in this transaction with the bank. Point number five that you need to know before taking a loan is that you need to understand the relationship that you're going to have with the banker, say with the loan officer. So what I mean by this is don't just go by interest rates because banks can cut corners at times. Meet your bankers, meet multiple of them and get to know them. Tell them that since the majority of the payment is going to come through finance, the bank needs to deliver at par with you. So you need to make it very clear to your loan officer that at no cost will you tolerate them delaying the deal that may actually hamper your deal. Let me share an example with you. So there was this customer of ours who actually went to a particular bank, and for some reason the relationship between the loan officer and the customer didn't match. So he actually ended up losing the deal because the loan officer delayed on his promises. So be very prudent while making that decision. And the last and final point that you need to really consider before you take a loan is adding a co-applicant or getting a guarantor on board. So at times I do understand that people may not be too happy by getting them as a co-applicant onto the property, but just consider this. Say you really like a property and you feel it has really good potential, and say the property is 1 crore, but your eligibility is just 50 lakhs. So if you add a co-applicant is anybody who's a working professional and say is your blood relative, so your brother, your mother, father, and your wife. If you add any of their incomes to you, they become a co-applicant, and then you can club both the incomes and achieve your real estate goals. So adding a co-applicant is actually a great thing if you are confident that you'll be able to pay back your loan and also achieve your real estate dreams. If you found this video helpful and have derived maximum value from it, don't forget to share it with your friends and follow us on Instagram. This is Diron Almeida, your real estate therapist when it comes to buying and selling real estate in this lovely state of Goa. See you in my next video.